Obviously, you click this video because you really want to learn how to trade, and yes, you are in the right channel. So in order for me to give you chair in my class, you will have to click that red subscribe button. I'm joking, you don't need me giving you chair anyway. And as well, like this video or not, but since you are my student, you will need to be seeing this type of video often in order to improve every day. That's why you should click that red subscribe button. So here is the question: why should you be a forex trader anyway? Forex trading is one of the easiest, hardest job in the world. I said it was easy because it is the only job you will have to stay at anywhere at any time to make a decision in order to click the buy or sell button in your laptop or any device at all. And it is hard in the point that only few people make it to the point of making money consistently from it. Trading can give you the life you deserve, though it's hard, but the suffering is nowhere compared to the reward you will get if you don't give up. Trading might give you the financial freedom, which may take you years to achieve if you go through business or real estate. But it is not that easy. Only 1 to 2% of people make it to that point. So you may want to watch this video to the end if you want to be among the 2%. So forex trading is the global market where people buy and sell currencies. How it works is you trade one currency for another, like Europe USD, the euro versus US dollar. If you think the euro will rise against the dollar, then you buy, and if you think it will fall, then you sell. Simple explanation: have you ever heard people making money from trading currency? That is called forex trading. Think of it like swapping dollar to Europe when you are traveling, but now it is online and for profit. You only make money when the price moves in your favor. The goal here is to buy high and sell low, or sell low and buy high in order to profit from the price difference. The only tool you need to start forex trading is not much. First, you need a broker, a platform that will connect you to the forex market. Example, FBS or XNET broker. You also need a phone and a laptop, a basic strategy and risk management. Don't worry, I will still guide you on that. When Europe USD is buying, it is called bullish. It means that Europe is getting strength against the US dollar. If you enter a buy trade on Europe USD, you profit only when market tends to go higher and the price moving to your favor could be caused by strong European news, weak US economic data, and market sentiment favoring euro. If you are still trying to figure out which pair actually work for you, there are minor pairs like Europe GBP, AUDJPY, super solid, and they are quicker. They have wide spread and less liquidity, often unpredictable, and their spread are painful. But here is what matters most: each pair has its own personality. Some trend high while others range. Some respond to news while others don't care. And your job is not to trade everything, but to figure out the one that fits your style, your time zone, and your strategy. Despite I am educating you, I will still have to tell you the truth. There is no 100% winning strategy. I know it is early to tell you this, but you still need to know anyway. If I don't tell you now, you will still keep losing money until you know. Don't worry, I'll still review to you guys the strategy you use and be making money immediately. Just stick with this video to the end. Here is why 98% of traders lose money, because they are searching for 100% win rate strategy, and that is a cycle that will never end. They will keep being in that cycle for years until they believe on things that will build profitability. As a new trader, every strategy you see out there have a 25 to 30% win rate for you, despite how hard you try to change that. But the truth is, the more time you spend with your strategy, the more you can increase your win rates over time. But despite that, you can still start making money from today if you focus on profitability. I don't care how many years you have been trading, but once you have seen this video, you have gained the knowledge that 98% of losing traders never came across. What people don't know is that there is a random distribution between wins and losses in any given set of variables that could define your age. But note that technical analysis is designed to put the odds in our favor based on series of trades, not just in one trade. And note that as a trader, there are still things you will need to fix that your strategy don't give a shit about. I'm going to list them and you may want to write them down in your book. And number 1 is hesitation. Jumping into a trade too late or too soon. This might be caused by FOMO. And simple explanation for FOMO is being afraid of missing out on a trade. And number 2 is not defining your risk while entering a trade. Your strategy can't force you to calculate your risk. Let's say you entered a trade and you randomly place a lot size. Then you are not comfortable with the dollar amount at risk. And then you couldn't take the loss that ended up being a bigger loss. And number 3, getting out of a winning trade and leaving money in the table, which is caused by solely focusing on the floating profit, which is in your P&L. Number 4, letting a winning trade turn into a loser without taking any profit, which could be caused by dissatisfaction and greed. And remember, your strategy can't save you from this, no matter the win rate. Number 5, moving our stop loss close to our entry and let the market stop us out and move back to our direction. This is caused by thinking we know what is going to happen next in our current open position. We have finally come to the end of this lesson, and next week I'll be teaching you guys about the candlestick pattern, everything you need to know about candlestick pattern, how to trade them and how to identify them. So make sure you subscribe so you won't miss that video. See you in my next video, guys.